Welcome to Video 10, the final video in your NMLS Safe Exam Prep series. Today we cover ethics and UDAP. Ethics and professional conduct questions make up 16% of the NMLS exam. The right answer is almost always the same. Put the borrower's interest first. Let's lock this in. MLOs owe a duty of good faith and fair dealing to borrowers. This means no misrepresentation, no steering to benefit the MLO at the borrower's expense, and honest disclosure of all material facts. This duty applies even when it costs the MLO money. If a loan does not serve the borrower's best interest, the ethical MLO discloses this, even if it means losing the commission. Professional obligation comes before personal financial gain, always. The LO compensation rule under Tyler Regulation Z prohibits MLOs from steering borrowers to loan products that do not serve their interests in order to earn higher compensation. When a lender offers higher pay for product B than product A, and product A better serves the borrower, the MLO must recommend product A. The compensation structure cannot override the borrower's best interest. Additionally, an MLO cannot receive compensation from both the lender and the borrower on the same transaction. The CFPB's UDAP authority covers three standards. Unfair means causing substantial consumer injury that consumers cannot reasonably avoid and that is not outweighed by benefits. Deceptive means an act or practice likely to mislead a reasonable consumer about a material fact. Abusive means taking unreasonable advantage of a consumer's lack of understanding, inability to protect their own interests, or reasonable reliance on the company. Any one of the three is sufficient for a UDAP violation. Representing an investment property as a primary residence to obtain a lower interest rate is federal mortgage fraud under 18 U.S.C. Section 1014. An MLO who knowingly processes a loan with false occupancy information participates in the fraud, even if the borrower initiated it. Friendship with the borrower provides zero protection. Once an MLO knows the stated occupancy is false, continuing to process the loan equals knowing participation in a federal crime. Every refinance recommendation must provide a net tangible benefit to the borrower. If closing costs take 8 years to recover through monthly savings and the borrower plans to sell in 2 years, the refinance does not serve their interest. The break-even calculation, cost of closing divided by monthly savings equals months to break even. If break even exceeds the borrower's planned hold period, recommending the refinance anyway to earn a commission is both unethical and a potential UDAP violation. When an MLO suspects falsified income documents, the correct action is to stop and report to the compliance department immediately. Documenting the suspicion in the file while proceeding with the loan does not protect the MLO. Proceeding with known or suspected document fraud, even with written documentation of concerns, can still constitute knowing participation in mortgage fraud. Stop, report, do not proceed. Fair lending obligations extend beyond final credit decisions to all aspects of the origination process, including service quality. Providing materially different levels of service, faster response times, more thorough follow-up, better explanations, to borrowers based on their race, national origin, or other protected class is a fair lending violation, even when all loans ultimately close on the same terms. Regulators use paired testing to detect exactly this type of service quality discrimination. Referring borrowers to a company in which the MLO has a financial interest without written ABA disclosure is both a RESPA violation and an ethics violation simultaneously. Even if the affiliated company provides excellent service at fair prices, the undisclosed financial relationship undermines consumer trust and distorts the referral. The borrower has the right to make informed choices, Disclosure protects that right. Warning signs of elder financial exploitation in mortgage transactions include unusual urgency, online-only investment contacts from people the borrower has never met in person, large equity at risk, and borrower confusion about the details. MLOs have ethical obligations, and in many states legal obligations, to pause, have a careful conversation, and potentially involve adult protective services before proceeding with a transaction that shows these warning signs. An MLO whose license has expired must stop originating mortgage loans immediately. They cannot originate one more loan before renewing. Each transaction, while unlicensed, is a separate regulatory violation. Both the MLO and their employer company face liability for unlicensed origination activity. Completing continuing education and renewing on time is a professional obligation, not optional. Ethics exam traps. Trap 1. The LO compensation rule is Regulation Z, not RESPA Section 8. Trap 2. Cannot receive compensation from both lender and borrower on same transaction. Trap 3. Documenting fraud suspicion while proceeding is not protection. It is participation. Trap 4. UDAP abusive standard targets, exploitation of consumer vulnerability. Trap 5. Service quality disparities are fair lending violations even when all loans close. Trap 6. Reporting discrimination is the right action, not a violation of any rule. Key ethics numbers. 16% of NMLS exam is ethics content. 3 UDAP standards, unfair, deceptive, abusive, anyone is enough. 0. What an MLO receives from both lender and borrower simultaneously. 1 correct action for document fraud, stop and report. 15. Minimum days to cure a RESPA violation in some contexts. The most important ethics principle, borrower's best interest comes first. Before commission, before quota, before convenience. Quick recap of ethics and UDAP. MLOs owe a duty of good faith and fair dealing. Borrower's interest always comes first. Low compensation rule. Cannot steer for higher pay, cannot receive dual compensation. UDAP. Unfair, deceptive, or abusive. Anyone violates. Occupancy fraud is federal crime even if borrower initiated it. Document fraud. Stop and report immediately. Net tangible benefit required before recommending refinance. Expired license means stop immediately. Service quality disparities are fair lending violations. Congratulations! You have completed the entire NMLS Safe Exam Prep video series. 10 videos, 10 topics, all the key laws, all the numbers, all the exam traps. Now it is time to drill the practice questions, take the mock exam, and schedule your real test. You have done the work. You know the material. Walk into that exam room with confidence. You have prepared. You are ready. Go pass your NMLS exam. I believe in you.